Welcome to the channel Get Rich. In this channel, I'll be talking about stock market, company analysis, and all investment related topic. So currently, we are going through a tremendously sharp correction in the markets. So if you are an existing investor, I'm sure you're not happy at these times. So in these times, what are the best sector to be in to pick stocks? So many would say it's consumers because everyone is rushing to buy a lot of stuffs and it's give them really a lot of revenue. But if you look at the valuation of consumers is very expensive. So next to that, if you look into other sectors which you want to be in this crisis, so which is pharma sector, which is the next thing which will be unaffected by the current ongoing crisis. So pharma sector as a whole is available very cheap. So today we are going to see fundamental analysis of one pharma company, Granules India. It has a market capitalization of 3,700 crores, which is in the segment of small to mid cap space. Granules India is a vertically integrated, growing pharmaceutical manufacturing company. Coming to their business, they started as an API manufacturing company. Before going in, what is an API? API is active pharmaceutical ingredient. So all drugs are made up of two core components. One is the API, which is the central ingredient that produces the intended effects in our system. And the other is excipient, the substance other than the drug that helps deliver the medication to our system. Traditionally, API production is produced by pharmaceutical companies themselves in their own countries, but at some point they are outsourcing it to other manufacturers in Asian countries like cheap producers in India and China, and they produce tablets and capsules out of API. So Granules India saw this shift is happening by outsourcing APIs. So they started developing APIs in huge quantities with large economies of scale back in 1990s. So this is the main core business of Granules India. So they started with APIs and now they are moving up the ladder from PFIs and FDs. So let's look at PFIs. What is PFI? So PFI, which is a mixture of API and some excipients, which delivers the medicine to our system. So it's just before the tablet stage. It's just a powder form before we compress it into a tablet or capsule. And then we have FD, which is a finished dosage segment, which is a tablet which is ready to sell to consumers. So FD is a high margin business. Everyone wants to be in that business. So Granules India is moving up from API to FDs. So then now coming to the API business of Granules. So looking at the core molecules as APIs which are produced by Granules India. So there are 5 core main molecules from Granules India. So one is paracetamol, ibuprofen, metformin, methocarbamol, guanfacine. So these are the 5 molecules. And then they recently added 2 new molecules which are cetirizine and fexofenadine. So look at the revenues from Granules India only from APIs. So in financial year 2016, Granules clocked around 534 crores of revenues, and then they moved up around 820 crores in financial year 2019. So if you see, the revenues are going up steadily from API, but then if you see the revenue contribution of APIs compared to the total revenues, so it's decreasing from 39% to almost 32%. So it means some other business is doing very well than APIs. So I will come to that point in some time. So before that, let's look at the production in metric tons. So in financial year 2016, they made about 22,000 uh, metric tons of production, and then they increased it around 25,000 metric tons in financial year 2019. So I calculated revenue per metric ton. So it's in lakhs. So it around 2.41 lakhs, which is they will get revenue for every metric ton in 2016. But if you look at now, it increased substantially. So it's around 3.29 lakhs per every metric ton, which means they are selling at more price, so the price is increased, but also it can be rupee depreciation as well, because most of their business are export based. So then if you look at the installed API capacity until this quarter, so it's around 39,360 tons per annum. So if you calculate with the financial year 2019 utilization of capacity, so you see the API capacity utilization is around 64%. So they still have more room to increase their capacity and be more profitable, because they still have 36% of capacity which is just sitting idle, so they can ramp up their production and then they can be more profitable. So this is about the API business. Then coming to the PFI business, so they have API molecules, right? So they are just using it for PFIs as well. So the revenue of PFI, it's around 387 crores in financial year 2016, which is increasing, sometimes ups and downs, and now currently it's around 387 crores, even though the revenues are fairly constant. So the revenue contribution is decreasing from 28% to 17%. So which means some other business is doing very well than this business segment. So if you look at the production, so they are in 12,000 metric tons in financial year 16, and currently they are around 13,472. So if you see the revenue per metric ton, it's also around, it's decreased a bit, but it's also around not much. So if you look at the installed PFI capacity this current quarter, so it's around 24,640 tons per annum. So that's their installed capacity. So compared to their current utilized capacity, so the current PFI capacity utilization is just 55%. So they still have 45 more percent to step in, and then they can ramp up the production. So they still be more profitable if you have to increase the 45% of capacity utilization. So, and then coming to the finished dosages. So finished dosages are the high margin business. So if you look at the revenue in financial year 2016, they have around 462 crores, and then they are moving around quite high, and the revenue is around 1073 crores in financial year 2019. So if you look at the revenue contribution, so it was 33% in financial year 2016, and it increased to about around 51% now. Look at that. So they are steadily increasing their high margin business, which is finished dosages. So if you look at the production, so it starts around 6,000 million dosages, and they reached around 9,000 million dosages. And if you also look at the revenue per million, so it's increased from 7.74 to 11 lakhs. So it's good. The revenues per million is increasing. That can be based on the increased price or also rupee depreciation. So like same I explained for APIs. So the installed FT capacity in this quarter is around 21,000 million. So the capacity utilization of finished dosages is just 47%. So you have still 53% of capacity which are just sitting idle to ramp up. If they have demand, they can just ramp it up. So for example, they don't have to have much capex for the next 2 or 3 years. So I will come to that in a second. So now let's assume they are running at full capacity in APIs, PFI, FDs. So they will clock revenues around 4,000 to 4,400 crores total revenue. So currently they are around 2,200. So no capex is needed for around 70 to 90% of revenue increase. So at 20% revenue growth, no capex is needed for next 3 years. So this company already done a lot of capex, and then they are waiting for the growth to come. So now look at the global presence. So where are they present and who are their customers? So they have market present in more than 60 plus countries, and they have 250 plus customers in their portfolio. They have around 3,000 employees, and they have 7 manufacturing plants. So where are their revenues are coming from? So let's see, their revenues are coming mostly from North America, so which is almost around 50%, and then they have a big pie from Europe, which is around 20%. They also have a big pie from India, which is around 20%, and then they have some around from Latin America and some from rest of the world. So almost 84% of their revenue is coming from exports. So almost 73% of the revenues are coming from well regulated markets like North America, Europe, and Canada. So now look at their companies and subsidiaries. So Granules India, it's the main parent company. So they have 4 operational plants at Hyderabad and one in Vizag. So they have 3 subsidiaries. So one in USA, so Granules Pharmaceutical Incorporation. So these are focused mainly on formulation development. They have a manufacturing facility set up in Virginia, US, and they are ramping up products. And then you have another one, Granules USA Incorporation. These company, they are set it up as a front end marketing company. So they sell under their own label. So they have their finished dosage segment tablets and capsules. They set it under their own label. So for that, they set up a front end marketing company in the US. They also have a subsidiary in Europe. So the next thing, another thing, they are currently building one more facility which is in Vizag. So they have like multi API facility with onco capabilities. So onco therapeutics, it's a top growth segment which is currently a bit high growth segment, and they are building new capacity for that. So it is expected to be operational in this quarter, which is for financial year 20. So it will be also a brings added revenue to their pie. So let's look at their ANDAs. So ANDAs, what is ANDAs? ANDAs is abbreviated new drug application. So what is it? So they file it to FDA. FDA is is a group of organization. They inspect whether the drug meets the respected quality and also the specified safety measures, etc. So they file ANDAs to this US FDA, and then if the ANDAs is approved, they can manufacture and sell it to the customers. So first they have to have ANDAs to sell in the finished dosage segment. So looking at the ANDAs, so they have around 20 ANDAs approved, and they have 19 which is pending. So in total they have 39 ANDAs, and then they have a subdivision RX and OTC. So what is RX and what is OTC? So RX is just prescription based drugs. So for example, these drugs can only be bought if you have a doctor prescription. So OTC, you can just get it from the pharmacy. You don't need to have any prescription from the doctor or something. So these are the two splits. So they also have a quite good amount of NDAs compared to their business size. So then coming to the joint venture, they had 2 joint ventures until last financial year. So one is Granules Omnicom and the another one is Granules Biocas. So they sold the investment to their joint venture partner, both companies around 110 crores. So they have around 50, their book value is around 50 crores for Omnicom and around 143 crores for Biocas. So it means in Omnicom they gained around 60 crores, but in Biocas they lost around 32 crores. So they already charged this in their income statement this quarter. They are yet to charge this profit in their income statement. So they have got cash, right? So what are they going to do with it? So they announced buybacks for 250 crores at the rate of 200 rupees per share. Now the share today it's trading around 145 rupees. So they are buying back at around 200 rupees per share. So they feel they have their company is undervalued now. So it's a good thing. Stock buybacks, it will reduce the stocks and it will increase the share price. So now coming to the financials. So let's look at the income statement, how their revenue growth. So it's a revenue from 2016 to 2019 and year to date. So they are increasing at around 18% CAGR in the revenues. And if you look at the EBITDA margin, so it starts in 2016 at 20%, and then they dipped around 16.5. Now it's around 21.3%. So what caused this dip? So basically, most of their raw materials are key raw materials are based on crude oil based. So in 2018, 17, 18, in this period, the crude oil spiked up a bit. So it will take some time to pass this cost to the customers. So these are the main reason for the EBITDA margin drop. But now look at the oil price; it's just $20 or $25 a barrel, right? It's an insane amount of cheap crude oil. So it means their raw materials cost is going to go down and they can still improve their margin further. It's a good thing. And also the other thing is PAT margin. So it also dropped down in 2018 and then it's gone up, shot up straight back. It's around 12.2%, which is it's a high from 2016. So as I explained, they have invested capex, huge capex for past 3 years. So it can drive 20% 3 year CAGR in revenues, 25% 3 year CAGR in profits, and they say their steady state EBITDA margin is around 21%. So also if they ramp up their capacity utilization from now around 50 to 60% to 70, 80, 90, so every year their EBITDA margin, they are expecting their EBITDA margin to go up by 1%. So it means high profitability. That's also another good thing. Now if you look at where their revenues are coming from, so higher revenue contribution coming from regulated market, which contributed around 74% of total revenue. So if you see their growth is very high in North America and Europe. Also if you look at their finished dosage segment, so it's API, PFI and FD. So if you see the growth in their finished dosage segment, it's grown around 32% CAGR and it's still growing in a huge rate. So if you look at this graph, it's started from 33% in 2016 and it's now grown to around 51% of FD formulation business. They're expecting it to go up in the next years to around 65%, which will increase their profitability further. So it will increase their margins further. So it's going to be a very exciting times for Granules. So now coming to the balance sheet. So look at the debt. So in March 17, they have around 600 crores of debt, and then it grown to 870, 900, and then they started decreasing. So these high debt levels is because they have invested a huge amount for the past 3 years, and though they are started decreasing, already started decreasing their net debt to EBITDA. So it's now around 1.4x net debt to EBITDA. So if you look at the cash to cash cycle, it's also decreasing, and it is going to increase the free cash flow. So if you look at the past 3 years, 17, 18 and 19, there is like negative, there is no free cash flow. Now they started generating free cash flow. That's a very interesting thing, because free cash flow, they are getting around 155 crores of free cash flow year to date. So yeah, people value free cash flow a lot now if they started generating free cash flow, but the point is whether it's sustained. So for example, if the free cash flow is sustaining for the next few years, then the stock is going to re-rate a bit. And if you look at the ROCE, it's around 24%, it dipped, and then it's around 23%. ROE is around 20%. Net worth is steadily increasing. So the management guidance. So now what does the management is saying about their business? So they are scaling up their US generic business because they have a lot of ANDAs filed and they can launch products. So they are expecting around 8 to 9 product launch in financial year 21, and they are expecting 6 to 7 more ANDAs approvals in from short to mid term, and all their ANDAs filed is in short market segment because they don't have much competition in those area. They are expecting it. So they are shifting towards high margin business around in next 2 to 3 years. As I said, they are expecting around 65% of their revenue likely coming from the FDs. So they are also going to commercialize the oncology block in Vizag. So it's going to ramp up from this quarter. They just completed capex, and there are more room to EBITDA improvement because they can have higher capacity utilization. So balance sheet strengthening also continues. They are reducing the debt. So going forward, they say no incremental large capex plan because they already have 3 to 4 years of capacity already in there. So what are their financial growth? So their revenue is expecting to grow 20%, EBITDA steady state at 21%, PAT 25%, ROCE 20 plus. So these are some management guidance. So let's look at some of the shareholding pattern of Granules India. So now if you look in this chart, so the promoter is holding around 43%, and FII plus DII, they are holding around 20 to 21%, and the remaining 36% is public. Also, if you look at the historical promoter holding, so they hold around 44.87% in December 2018. It reduced a bit, but not a lot. So it's now they are holding around 42.9%. But if you look at the pledge shares of promoter shares, if you don't know what is the pledge shares, is for example, if the promoter want to buy some loan, they can pledge their shares as a collateral to buy some loans. So for example, in the volatile times, if the share price drops, if the then they the lender can invoke their shares, so it's always a bad thing. So they have around 60% of pledge shares in 2018. They are constantly decreasing it. In this quarter, their pledge share comes around just 30% from 60%. That's also a very good thing from a shareholder perspective. If I look at the promoter's pledge shares is coming down, that's a very good thing. And also, if you look at the historical institutional FII plus DII holding, it's around 12% in December 2018. It's slowly increasing, and now this quarter they are holding around 21%. They are slowly adding. FII and DII are buying Granules India even in this volatile market, in this bear market, and a small company like this, FII and DII, they are still buying. It's also a interesting thing to watch. And then coming to the valuation, so now the revenues from Granules, they are growing from 1300 to this quarter 2000 to 79. So what am I projecting for the next coming years? So for financial year 20, it's around 2700 crores. So they have already achieved around 2000 crores, 2100 crores. So they can make it 2700 for sure. And then I am expecting it to grow at 20% revenue growth every year, year on year. So the revenue growth, you can see the revenue growth here. So I'm expecting for the next 3 years, its revenue is going to grow at 20%. So what happens to the net profit? So it's currently around 236 crores. So I'm also expecting net profit to grow. The management says around 25% net profit growth. With I think they are speaking about the EBITDA margin improvement, so they can make it. So, but currently I just fixed the steady state EBITDA margin, so I get only 20% net profit growth here. I also maintained growth, the same growth rate for depreciation as well. So I just did a conservative estimate for net profit growth. It's around 20%. So if you look at PE ratio, currently it's trading at around 12.08 trailing PE. But if you look at the next 3 years, it's going to be 7.11 with the increase in revenue. So what's my price target? So if I want to estimate the price target very, very pessimistically with what is currently trading now. So now currently Granules is trading around 12 PE. So I assume, okay, it is not going to re-rate, it's just going to trade around 12, which is the historical average. So I'm just going to take 12 PE, which is the current valuation. So the next 1 year, it can grow to 173. The current price is 153. So the price growth I am estimating, it's around 20% for 1 year, 42% cumulative growth for 2 years, 70% cumulative growth for 3 years. I am telling it's a pessimistic estimate. So let's come to the optimistic estimate around PE re-rating, because the promoter are reducing their pledge shares, they are repaying their debt, they are increasing their balance sheet, they are improving their EBITDA margin, they have a very high revenue visibility. So it's all good for the company. So I'm sure the stock is going to re-rate. And the pharma sector, which is trading at a rock bottom valuation, the whole pharma sector. So I'm quite confident the P is going to re-rate P 20. Even if the market goes very optimistic, it can even surpass 2025 P, but I'm just estimating for 20 Ps. So for the next 1 year, so the price is going to grow. For 1 year, it's 285. So I'm just going to talk about the cumulative price growth. So in 1 year, I'm expecting 96% growth in 1 year, and 135% growth in 2 years, and 180% growth in 3 years, which means it's almost 3x the stock, which is currently trading at around 145. So according to me, it's a huge value buy at this current valuation. But of course, it's my point of view. You have to do your own due diligence before buying the stock. So this is my valuation, and thank you for the video. So um, if you like the video, if you have any questions, put comments. I would be very happy to answer this. Thank you for watching. Thank you.